China's auto market is electrifying. The streets are buzzing with the hum of electric motors, and charging stations are popping up everywhere, signaling a massive shift in the way people move. Two companies are leading the charge, NIO and LI Auto. These two giants are not just competing, they are setting the pace for the entire industry. They're battling for dominance in the world's biggest electric vehicle market. The competition is fierce, sparks are flying. Will NIO surge ahead? NIO, known for its sleek designs and innovative battery-swapping technology, is pushing the envelope. Can LI Auto maintain its momentum? LI Auto, with its extended-range electric vehicles, offers a unique solution to range anxiety, appealing to a broad spectrum of consumers. This is a battle for the future of mobility. The stakes are high. The outcome will shape the global auto industry and influence how we think about transportation. Both companies have poured billions into developing cutting-edge technology. From autonomous driving features to advanced battery systems, the innovations are groundbreaking. They're vying for a slice of a market that's expected to explode in the coming years. Analysts predict that by 2030, electric vehicles will dominate the roads, and these companies want to be at the forefront. But this isn't just a friendly competition. It's a high-stakes game where the winner could set the standard for the entire industry. Boardrooms are tense, strategies are being crafted, and every move is critical. It's a high-stakes showdown with no clear winner in sight. As the race heats up, one thing is certain: the future of transportation is electric, and the world is watching to see who will come out on top. The rivalry between NIO and LI Auto has spilled onto the public stage. What started as a battle for market share has escalated into a war of words. The CEOs are trading barbs, executives are taking sides, the tension is palpable. The catalyst? A seemingly innocuous ranking of weekly car sales. NIO's president Qin Li Hong took issue with LI Auto's position on the list. He argued that the ranking was misleading and didn't accurately reflect the true pecking order in the EV market. Qin Li Hong didn't mince words. He publicly criticized LI Auto's reliance on extended-range vehicles. These vehicles use a small gasoline engine to extend their range. Li Hong argued that this technology is a stopgap measure. He believes it will soon be overtaken by pure electric vehicles. Li Hong's comments ignited a firestorm of controversy. Supporters of LI Auto were quick to defend the company's technology. They argued that extended-range vehicles offer the best of both worlds: the environmental benefits of electric vehicles with the range and convenience of gasoline-powered cars. NIO's senior executives rallied around their president. They echoed his criticism of LI Auto's sales tactics. They also defended NIO's focus on pure electric vehicles. They argued that this is the only way to achieve true sustainability in the auto industry. NIO's stance is clear. They're betting big on the future of pure electric vehicles. They believe that consumers will ultimately choose the superior technology and environmental benefits of EVs over the compromises offered by extended-range vehicles. Section 5. A voice of dissent from Shun. Not everyone agrees with NIO's assessment. The CEO of Shun, another Chinese EV maker, criticized the industry's obsession with sales figures. He argued that companies should be focusing on developing innovative technologies rather than engaging in petty squabbles. Xiaopeng's comments highlight a growing divide in the Chinese EV market. On one side are companies like NIO that are laser-focused on sales and market share. On the other side are companies like Shun that are prioritizing technological innovation. Section 6. The government steps in. The Chinese government has taken notice of the escalating rivalry in the EV market. Concerned about the potential for unfair competition and misleading advertising, regulators have stepped in to try to restore order. The government's intervention is a reminder that the Chinese EV market is not a free-for-all. The government plays a significant role in shaping the industry's development. Companies that fail to comply with regulations risk facing penalties. Section 7. A tale of two strategies. NIO and LI Auto are pursuing very different marketing strategies. NIO is targeting affluent, tech-savvy consumers in major cities. They're positioning their cars as premium products that offer a luxurious driving experience. LI Auto, on the other hand, is focusing on families in smaller cities. They're emphasizing the practicality and affordability of their vehicles. Both strategies have been successful in attracting customers. NIO has established itself as a premium brand with a loyal following. Li Auto has tapped into the growing demand for affordable, family-friendly EVs. Section 8. Li Auto's environmental hurdle. Li Auto's reliance on extended-range vehicles has created a challenge for the company. The Shanghai government recently announced restrictions on the sale of such vehicles. This is a setback for Li Auto, as Shanghai is a key market for the company. The government's decision reflects the growing concern about air pollution in China's major cities. While extended-range vehicles produce fewer emissions than traditional gasoline-powered cars, they still rely on fossil fuels. This puts them at a disadvantage compared to pure electric vehicles. Section 9. The allure of pure electric. In recent years, the automotive landscape in China has been undergoing a significant transformation. The allure of pure electric vehicles, EVs, is becoming increasingly irresistible to Chinese consumers. The consumer trend in China is clearly shifting towards pure electric vehicles. Sales of EVs are soaring, while sales of gasoline-powered cars are declining. This shift is not just a fleeting trend but a substantial movement driven by various compelling factors. This is due to a number of factors, including government incentives, rising fuel prices, and growing environmental awareness. The Chinese government has been proactive in promoting electric vehicles through subsidies and tax incentives, making EVs more affordable for the average consumer. Additionally, the increasing cost of gasoline has made electric vehicles a more economical choice in the long run. NIO is well positioned to capitalize on this trend. The company has been at the forefront of the electric vehicle revolution in China, offering a range of innovative and high-performance electric cars that appeal to the tech-savvy and environmentally conscious Chinese market. The company's focus on pure electric vehicles aligns perfectly with the preferences of Chinese consumers. NIO's commitment to sustainability and cutting-edge technology has earned it a loyal customer base and a strong market presence. Li Auto, on the other hand, will need to adapt its strategy if it wants to remain competitive in the long term. While Li Auto has found success with its range-extended electric vehicles, the growing preference for pure electric vehicles suggests that the company may need to pivot towards fully electric models to meet consumer demand and stay relevant in the rapidly evolving market. Section 10. The future of the rivalry. The rivalry between NIO and Li Auto is far from over. Both companies are determined to become the leading EV maker in China. They're investing heavily in research and development, they're expanding their product lineups, and they're aggressively marketing their brands. The competition between these two companies is good news for consumers. It's driving down prices, improving technology, and expanding the availability of electric vehicles. The future of mobility in China is electric, and NIO and Li Auto are leading the charge. Section 11. Conclusion. A market ripe with opportunity. The Chinese EV market is a dynamic and rapidly evolving landscape. With a population of over 1.4 billion people and a growing middle class, the demand for electric vehicles is skyrocketing. The government's push for cleaner energy and reduced emissions has further accelerated this growth. NIO and Li Auto are just two of the many players vying for a share of this lucrative market. These companies are not only competing with each other, but also with international giants like Tesla and emerging local startups. Each company brings its unique innovations and strategies to capture the attention of consumers. The competition is intense, but the opportunities are vast. Factories are ramping up production and engineers are constantly working on new technologies to improve battery life, charging speed, and overall vehicle performance. The race to dominate the EV market is on, and every player is bringing their A-game. One thing is certain, the future of the auto industry is electric. Charging infrastructure is expanding rapidly, making it more convenient for consumers to own and operate electric vehicles. The shift from fossil fuels to electric power is not just a trend, it's a necessary evolution for a sustainable future. And China is at the forefront of this revolution. With significant investments in research and development, the country is setting new standards in the EV industry. Chinese manufacturers are not only focusing on domestic sales but are also eyeing international markets, aiming to become global leaders in electric mobility. The battle between NIO and Li Auto is just one chapter in this exciting story. Both companies are continuously innovating, introducing new models, and enhancing their features to stay ahead of the competition. Their rivalry is pushing the boundaries of what's possible in electric vehicle technology. Stay tuned for more twists and turns as the Chinese EV market continues to evolve. With new players entering the field and technological advancements happening at a rapid pace, the future of electric vehicles in China promises to be thrilling and transformative. The journey has just begun, and the possibilities are endless.